Good afternoon, everyone, and welcome to TBR's quarterly Public Cloud Market webcast, recapping performance as reported in our Cloud Public Market Landscape and Cloud Vendor Profiles. My name is Allison Crawford, and I'll be your host for today's webinar. In the next 45 minutes, Analyst Jillian Mirandi and Senior Analyst Allan Krans will walk you through what trends are shaping the public cloud market and how vendors have fared over the last quarter, followed by a Q&A of these trends and how they'll affect you. Just to give you a heads up, as part of our ongoing cloud research stream, we're launching our Disruptor and Innovator Profile research streams, along with our Cloud Integration Benchmark and Cloud Developer Research. And these research streams will all stand alone, but also influence the Public Cloud Market Landscape webcasts and benchmarks that you guys subscribe to. Before I pass it over to Allan and Jill, there are a few logistics I'd like to cover with you. First, we're recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others we posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Jill and Allan will address them at the end of the presentation. Or if you'd like to set up a private client inquiry for more detailed discussion, please reach out to any one of us at the end of the presentation and we'll set up that conversation for you. Third, we're going to send the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight, or go to our website, as Jill and Allan have a couple of thought leadership pieces out now. They're available for download. Now let me introduce Jillian Mirandi and Allan Krans. Jillian has been spearheading our public cloud research and is the lead author on this program. Allan's been covering and writing about the software market for over 7 years, and is leading our research coverage in private hybrid cloud. Together, their strategic advice is helping several of the large cloud vendors identify new opportunities and revenue streams. And with that, let me hand this over to Allan.
Thanks, Allison, and thanks everybody for joining today. So as we get started with today's presentation, I wanted to set some background and context for what we're seeing in the overall cloud market. So when we look at in the context, particularly for a lot of our clients and a lot of the participants in the cloud space, it's not just about growing only in the cloud area. It's really about having a more diverse presence and history in terms of providing IT solutions for a long time. And so the context for their growth plans going forward and the different initiatives that they have, really start to fall into place in terms of why there's so much focus on cloud services and capitalizing on the different markets that are developing as cloud matures and grows beyond just pure plays around the public cloud space. So when we look at a lot of the traditional markets that we cover, the overall market growth, now there's still pockets of opportunity, there's opportunity to take share from other vendors, but just in terms of the aggregate opportunity that's available, the sizes of those markets are not growing at much above just the overall rate of economic expansion in the area of 2 or 3% at most. Some are actually declining. And so the dynamic is that for vendors that are participating in the IT space, cloud really becomes even more important to grow the overall size of their aggregate business. So today we'll focus on the public cloud space, which is the most mature cloud segment that we cover. And you can see as additional areas and different flavors of cloud get built out around the public cloud area, those growth rates, as those markets are in that expansion phase, undergoing new waves of initial client adoption, the growth rates are even higher as you get outside of just the public cloud services. So we'll talk a lot as we get into the conversation about how cloud and public cloud is interplaying with these other maturing market segments. But it's all overly important for vendors in the space to capture this growth opportunity in cloud to offset the flat or declining traditional existing market segments for a lot of the providers. So when we look at the overall size of the cloud market, again, here's another one where we put in context public cloud versus the other segments of the market. So you can see just in the public cloud space, we're estimating, based on our customer research and our vendor-up research, that it'll be more than $100 billion opportunity by 2018. And I think there's two things to highlight in terms of how the market's going to shift and evolve as the public space grows to over $100 billion. So when we look at the two things that stand out to us are within the cloud professional services space, growing opportunity there, but the opportunity is also shifting in regards to dealing with the complexity that's being created, not just with the growth in public cloud, but with the growth in managed private and also cloud components adoption, that the services opportunity is really being highlighted by that growing complexity, and the customers are increasingly facing, exactly why they thought cloud was a good solution to their IT infrastructure in the first place, which was delivering simplicity. So as the number of services, as the size of those services grow within organizations, they're facing this increasing management complexity that they need help to address, to put into a more modern structured management framework so that it's not something that becomes increasing management burden going forward. They can continue their path in terms of additional cloud adoption, but have the processes and tools in terms of the right structure to manage those environments going forward. The second thing that we see changing in this market overall is obviously the public cloud SaaS remains the largest overall market opportunity going forward, but that enabling that will be this play around the platform as a service area, and that for the major platforms that are out available competing for developer mindshare and investment, those are the things that are really going to enable that additional growth in the SaaS space, provide the tools and the management frameworks for existing ISVs, for new startups in the software as a service segment to come in, provide solutions that include both software as a service but also business process as a service as you get into the integration of multiple different services and processes that will drive the growth in SaaS going forward. So we really see these common platforms for development, investment, and deployment being critical to driving the software as a service growth that we're predicting over the next 5 years. And then lastly, before we get into the specifics around the public cloud space, wanted to highlight this because we really see multiple dynamics at play in terms of how cloud is evolving going forward. And that what started with public cloud as a very technology-focused type of adoption also enabled this new dynamic within customers in terms of who's involved with making purchasing decisions, the processes, the organizations within the companies that go through that process of evaluation and then consideration shifted as well with the advent of public cloud starting 5+ years ago. And that we've seen that private cloud is a return to a lot of the historic ways that particularly large enterprises have made IT decisions. So there's been another evolution in terms of as that complementary cloud market has really grown and matured, both in terms of the third-party delivered services as well as clients building their own environments. It brought with a different purchasing dynamic than we saw with public cloud. Now, the way that we see hybrid really melding these two together, changing both the way that technology is purchased as well as how it's managed going forward, is that drive to really put it back into a centralized management framework that's controlled by IT. And that's a dynamic that we've seen reflected in terms of for hybrid and even private cloud adoption in our most recent study. It's not solely a line of business driven decision. Most of the budgets and controls still reside on the part of IT, but it's much more closely aligned and involved around the business stakeholders for those solutions as they look at real outcomes-based adoption. And so these are the things that, yes, a lot of solutions will be driven by a public cloud back end, but that will have professional services wrappers or private cloud components that are integrated and orchestrated together to more closely align to the line of business perspective, which is on what the outcome is, what the business behavior or strategy that's enabled by those investments are. And so that's perspective that we see driving a lot of that public cloud growth going forward. It's going to be less about the individual technology solutions, more about the integration between them and the ability to tie it back to the business objectives for the customers going forward. So with that background perspective, I'll hand it over to Jill to dive into the public cloud updates for 1Q14.
Thanks, Allan. Now, this slide is from our 1Q14 public cloud benchmark, and it really shows a snapshot of where the market is. The x-axis represents absolute dollar growth over the year-ago quarter. The y-axis represents year-to-year percentage growth over the year-ago quarter, and the size of the bubble represents the volume of revenue for 1Q14. Now, over the past few years, the public cloud market has begun to mature. The outcomes of this maturity have weighed in across different areas. For example, Salesforce, Microsoft, and Amazon, they all generated over $1 billion in public cloud services in the quarter. Now, a few years ago, it was a huge deal that these vendors were $1 billion a year companies, and now they're increasing growth rates and they're generating that revenue just in 3 months. The maturity is driving portfolio expansion, it's driving operational maturity, as well as global expansion. So in terms of the infrastructure as a service world, AWS and Google have increased the pace of product launches to include BI and analytics, management and monitoring tools, and added security features. On the SaaS side, applications vendors, Salesforce, SAP, Workday, they're all expanding across lines of business to create a customer engagement platform. In terms of operational maturity, we're seeing much more formalized go-to-market strategies with the focus on direct sales for the pure plays and the rolling out of cloud to the channel for the more traditional vendors. We're also seeing massive amounts of spend on cloud-enabling data centers from vendors such as Amazon, IBM, Google, and ServiceNow, who, unlike the majority of SaaS vendors, actually has built all of its own data centers. Last but not least, the maturing market and the maturing North American market in particular is driving vendors to expand into Europe, into APAC and China most recently, and into Latin America. Now, Latin America, a few years ago, vendors began to invest there. Verizon has a few data centers. Google has been working on a Chilean data center. But to date, we really haven't seen that market take off. But we do think that will be an area of investment after the more recent European and Asian expansion. So at this point in the cloud game, there definitely are winners, but there aren't really losers quite yet. The future infrastructure market will be made up of a few vendors when everything shakes out. We think Amazon Web Services, Google, Microsoft Azure, IBM, and most likely HP with this launch of Helion, followed by a few specialized players in terms of industry and regional players. Now, the SaaS and PaaS markets are a bit different, and they're much more broad given the number of business applications and platforms being used. It's safe to say today that Salesforce has won in the CRM market, Workday in the human capital management market, and ServiceNow in the IT service management market, but there are many more markets to be won in coming quarters and coming years. We think the next major workload that will gain traction in public cloud is ERP. Companies like SAP, Microsoft, and Oracle are well positioned to migrate their current customers to a cloud-based ERP solution, But to date, we think these vendors are still in early days, as there are many challenges that they'll face when migrating customers from an on-prem ERP system to a cloud-based system. It's one of the larger and most complex software workloads, so it will be challenging, but there's a huge opportunity in a pretty nascent market right now for public cloud. Now, I keep saying that the market is maturing and that there are winners. But it still is early enough that large investments can quickly push vendors into this leadership space. 12 to 18 months ago, Google and IBM were in no way public cloud leaders in terms of revenue, but R&D efforts, many acquisitions, and market messaging more so in Google's case, have really begun to pay off, and IBM and Google are now 100% in that leader bucket. Now, Microsoft was early to market in the public cloud space with O365 and Azure, but over the last few quarters, growth has been beginning to slip. We do expect with new CEO Satya Nadella's efforts around reshaping Microsoft and improving the Azure platform will boost Microsoft back up, up into the right in coming quarters.
And I think the other thing, as we looked at the growth projections for the markets overall going forward, how does it impact this, if we fast forward 2 or 3 years down the road? When you look at, some of the leaders in terms of the current market, I think the applications providers, as we looked at that software as a service growth, if you look at the Oracles, the SAPs, even the IBM in some regards, they'll be having a bigger impact in terms of their overall presence in the cloud market as more of the opportunity and growth shifts to software as a service going forward compared with infrastructure platform as a service.
So now we've taken a look at the market from a revenue standpoint. We want to talk about 3 high-level trends across the SaaS, PaaS, and infrastructure as a service market that will help shape the market over the next year or two. Public cloud SaaS vendors are investing in line of business solutions such as marketing automation to create a more robust customer engagement platform. As these vendors mature, they pivot from a single tool expertise to integrating various tools and creating the solutions to serve a more broader market and drive customer expansion. On the PaaS side, vendors are focusing on improving their developer ecosystems from both a technological and a business model perspective. They're investing in simplifying UIs, in software development kits, in mobile development and deployment, in opening APIs, and making it simple for developers to leverage their app stores. Leading PaaS vendors, Google and Salesforce, are also investing to develop in new ecosystems around wearables. In the infrastructure as a service market, global vendors, Amazon, IBM, and Microsoft are expanding into China to grow revenue and compete with popular Chinese vendor Allan. While regional vendors will remain critical in many countries, including China, global players, data center build-outs, and local partnerships will really help drive revenue and eventually drive leadership across those countries. First, we'll take a deeper dive into the SaaS market. We'll talk about the growth leaders and then the revenue leaders. Growth leaders in the quarter include Google, Box, and MuleSoft. We expect Google to remain a growth leader in this market as relaunches of Drive, Docs, Sheets, and Slides that they were launched in June and July, along with new offering Google Drive for Work. Now, Google Drive for Work is essentially a premium Google Apps package for $10 per user per month. That includes unlimited storage, added security, and added compliances such as HIPAA. This will directly compete with vendors like Box, another growth leader, Dropbox, Microsoft and EMC's new solutions, and it just shows the power of these large vendors. So Google and Amazon, they're both backed by large, profitable businesses. They can invest in the capability and compete very quickly with with standalone vendors. So Box does continue to improve its products through R&D and niche acquisitions, and it's also beginning to use large customer wins. Most recently, its win of GE in May to drive brand awareness in the enterprise and in various verticals. We think that Box is winning in the cloud-based content management and collaboration space today. It will continue to invest in use cases and the customer experience and simplification, but will face challenges as the larger vendors shift focus on this market. Revenue leaders include Salesforce, Microsoft, and SAP. And all of these vendors are expanding their portfolios beyond core products. So Salesforce CRM, Microsoft started with O365, and SAP with its acquisition of SuccessFactors to create the more integrated front-end solutions or customer engagement platforms. By doing this, vendors are able to cross-sell into existing customer bases, taking money off the table for competitors, as well as to make it more difficult for customers to get off of their platform once it's more integrated throughout the entire business process. To expand on these leading SaaS vendor strategy, this slide shows the many acquisitions that have been made over the past couple years to expand point products across LOBs and form these platforms. While integrating these acquisitions fully into the portfolio is a challenge. For example, Salesforce's Marketing Cloud, it's not quite integrated with the rest of Salesforce at this point. We expect a cohesive portfolio and probably more importantly at this point, cohesive messaging to come out over the next 12 months. The CRM, marketing automation, and HR lines of business, they're getting pretty well entrenched with cloud options and with both large vendors and standalone vendors. But again, ERP is lagging across the public cloud market. The vendor who wins in the ERP market, along with these other markets mentioned, will be able to provide customers a fully integrated front office and back office on which to run their business. Add in developers to help customize the continuous updating of technology, which is a feature of cloud in general. That makes it very, very difficult for that vendor to be replaced. And you can see on the right hand of this slide, vendors are already starting to, probably leading, Salesforce was the first one, but other vendors are starting to message this one platform customer engagement experience. The next area we wanted to get into is the platform as a service market and the rising importance of the developer ecosystem. So what are leaders doing to win? Google is improving Google App Engine to quickly expand and open up APIs, developer kits. It's added language support and simplified its UI. Google, we've seen it, is really speeding the development and deployment of these enhancements faster than we've ever seen it do to date, which underscores the importance and the investment that Google is putting into its cloud business now that it is fully entrenched in getting into that enterprise space. With the release of Cloud Endpoints, Google's mobile backend as a service in November, plus investments in Project Kubernetes, which is an open source Docker-based project, Google is beginning to solve the critical problem of managing and moving applications across environments. So right now, developers can develop in their own ecosystems, but it's beginning to be a challenge now that there are so many endpoints and devices, so many different platforms on which to develop. Google is trying to make it so developers can develop once and move and deploy applications across others' platforms and infrastructures, which the Kubernetes is being backed by IBM, Microsoft, Red Hat, and a number of startups. And to Allan's point about integration, that will really begin to drive integration and drive developers to Google's platform. In a similar but separate vein, Google is also driving developer interest around Google Glass and Google Fit ecosystems, trying to streamline development across mobile, cloud, end devices, and now wearables. Another leader in early-to-market player, Salesforce, is integrating and bundling its platforms to attract and retain developers. So Salesforce, it's another vendor that has a few platforms. It has Force.com, Heroku, and Fuel, which came with the acquisition of ExactTarget. And what it's doing is it's combining Force and Heroku. So in Heroku Connect, you can log on to one interface and manage both ecosystems. And then Salesforce One provides a layer on top of all three ecosystems to help better manage your environment. Now, Salesforce also recently launched a wearable ecosystem that we'll discuss in the next slide. And lastly, Microsoft is the third leader here. Microsoft is focused on improving developer ease of use to sustain its developer ecosystem. In April, Microsoft announced the Azure Preview Portal, which simplified the application development process by giving developers one portal for developing, deploying, and managing applications across Azure, Visual Studio, and App Insights. So again, you can see these leaders, they have big developer ecosystems, lots of tools, and they're all trying to simplify and combine their different platforms and give developers one view into their ecosystems. Here we'll go into a little bit more of the wearable communities. By launching developer packs for wearable technology, Salesforce and Google are providing developers new platforms on which to create applications and generate revenue. These new use cases will hopefully drive more developers to the Google and Salesforce platforms. And another reason for doing this is to drive the more forward-looking developers who are interested in the newer technologies and the newer business cases to these platforms. Now, the wearable technology market is still emerging, and launches of these initiatives show Salesforce and Google's commitment to maintaining and growing their developer ecosystems. In June, Salesforce launched the Salesforce Wear Developer Pack for creating enterprise applications for wearable technology. As part of this pack, Salesforce offers 6 open source applications that provide developers with a base on which to begin creating their application. Google relies on its Android mobile developer ecosystem to create or customize applications for its wearable technology and gain traction in the space. Also in June, Google announced that Glass will support Android Wear, Google's wearable development platform. The support enables Android developers to leverage one platform to create applications across phones, smartwatches, Glass, and eventually Fit. In July, Google announced Fit, the wearable fitness tracker, and we think that the data and applications Google collects with this device will eventually help push Google further into the healthcare vertical. Now, there's still plenty of room for development in the enterprise cloud, and even more in the mobile space, but early messaging around wearable development will really help position Salesforce and Google as innovators and in the minds of developers, and hopefully will drive those developers to those platforms. Now, keep in mind, these technologies are cutting edge, but Google and Salesforce, yes, they want to create cool new technologies, but they're really doing this to stay ahead of the rest of the market and keep their early mover advantage in this space, and to hopefully lock up the wearable market, which is tied very closely to the machine-to-machine market. Now, we'll round out the presentation talking about infrastructure as a service, who the leaders are, and followed by their growth in China. First, we'll talk about what happened in the market. So unsurprisingly, AWS continues to dominate the public cloud infrastructure as a service market. It still generates the majority, we think around 75% of revenue from its more vanilla compute and storage offerings, but ongoing service launches drive additional revenue from existing customers and more importantly, increase enterprise appeal to help Amazon enter larger, more lucrative accounts. New tools include Kinesis, which is BI and Analytics, and Workspaces, which is VDI, launched last November, and Zocala, which is a file sync, storage, and collaboration tool, as well as mobile services for developers and for customer access, just launched this month. We expect Amazon to continue building out its portfolio, to continue building out its direct sales team, and to a smaller extent, its professional services team. Given its enterprise push, hybrid is now a more focal part of Amazon's strategy, underscored by recent AWS Summit announcements and keynotes and the expansion of DataPipe. We think as Amazon gains more traction in the enterprise, the largest 20 or so % of its customers will drive the majority of its revenue. So getting into the enterprise and quickly expanding there and adding the hybrid capabilities to connect to customers' data centers is really key for Amazon to continue down its path to success. Now, Google Compute Engine was made generally available in December, so they're still very, very new, but we think they'll be a significant player in the market, and really the only player at this point that we think can start to close the gap with Amazon. Now, right now they're mainly focused on the ISVs and developers and want to work with ISVs to move software onto the cloud. Once that happens, they'll leverage their ISVs as a channel into the enterprise. So it's different than Amazon, who wants more of a direct relationship with the enterprise. Google wants the enterprise, of course, to use their technology, but is going to rely on ISVs and systems integrators to get into those customers. In that note, we think Google will begin partnering with more global SIs to drive its platform into the enterprise and to support and manage both the technology and the relationship with these customers. Now, this leaves a huge opportunity for SIs to offer their end users the Google platform, so a super low-cost, very scalable cloud platform as a piece of their hybrid cloud infrastructure, but still remain in control of that relationship. So if people, there's a huge opportunity for companies like IBM, HP, Accenture, and Dell is Google's first SI partner that supports Google platform. There's a lot of money to be made in the management aspect. And that's I think where Google and the SIs can really form a strong bond. Now, for IBM, their infrastructure as a service business is mostly made up of SoftLayer. Growth will slow once SoftLayer is fully incorporated for a year, but will continue to be a crucial element in IBM's hybrid cloud business, as well as a push into the smaller companies given SoftLayer's customer base prior to the acquisition. Microsoft, you don't see highlighted on this graph. It's still very new and small, but we do think it will become a major player in coming years. Now to talk a little bit about China. I'll start off with some facts about what these vendors are doing to get into the market. Microsoft launched Microsoft Azure through a partnership with 21 ViaNet in March, and launched O365 through ViaNet in April. Amazon announced the upcoming preview of its infrastructure as a service in China sometime this year. The date is still to be determined. And similarly, in December, IBM announced a partnership with 21 ViaNet to launch IBM Cloud Managed Services in China. Now, IBM also announced that their revenue in China dropped 20% in the quarter. And we think that that's giving them an extra push to really drive their cloud revenue to offset some of that decline. Google and Rackspace, they haven't entered China yet. We don't think they will in coming quarters, mostly because Google canceled its plans to expand into Hong Kong with a data center and is now focusing on Singapore and Taiwan And Rackspace is focusing on APAC, but more through Australia. The Chinese cloud infrastructure market, it is an emerging opportunity, but with very high risks. The broader market is waiting for the Amazons and IBMs and Microsofts of the world to test the waters in that market to see how the customers react, and also to see how competition is with local vendors such as Allan. Now, although there is revenue opportunity here, China's IT environment presents many challenges, specifically for non-Chinese vendors looking to expand. More global vendors are, by regulation, they need to partner with Chinese vendors to comply with these regulations. The partners really have the say, and they lessen the revenue opportunity for the vendors. For example, 21VNet earns about a quarter of the sell-through revenue for Microsoft Azure. So the ball's kind of in their court. If they wanted to up that, they could. And then there's Allan. So China-based infrastructure vendor Allan, it has a very strong position in the Chinese infrastructure market, both for public and private cloud. They have strong adoption and strong revenue in the region. But we do think that they are threatened by the influx of competition from Amazon, Microsoft, and IBM. The US-based vendors, they have a more global solution. It's more scalable. It's more mature, and it will be offered at a similar price as Allan. To defend against these threats, Allan is investing its data center presence to try to move outside of China to compete on a more global scale. In May, it opened new data centers in Hong Kong and Beijing. The data center in Hong Kong will enable Allan to offer infrastructure services to customers on a more international basis, which again, for Chinese vendors who may already use Allan, they might remain attractive over other vendors with them looking to expand. So in the short run, we think it will take a lot of time and effort to break into the Chinese market. I think China and Germany right now are probably the hardest markets to break into, but present the greatest opportunity for infrastructure vendors. And we think that these vendors will invest the time and energy needed to become successful. And with that, we can start questions.
Great. Thanks, Jill, and thanks to everyone who sent questions through now. We have several in queue, so if you do have a question, please send it through at this time. The first question we have, I can scroll through real quick. Do you see a tendency from customers to pick public cloud for their non-important data and choosing hardware for keeping sensitive information?
So this is Allan. So historically, I would agree that that's been the type of decision dynamics that customers have made in terms of whether to keep it on-prem or to use a public cloud for different services. I think increasingly, though, we're seeing more as the market for private cloud services, and not just ones that customers build within their own data centers, but ones that they can subscribe to from a third-party provider become available. Now it's becoming more of a diverse set of options that customers can choose from, and that's what's driven a lot of the private cloud and the managed private cloud growth that we've seen over the past 2 years, is the availability of those alternatives to either I have to keep it on my own site or send it to a public cloud. There wasn't a middle ground where increasingly we're seeing customers be able to go with that middle ground and not have to choose between those two extremes.
Jill, do you want to add anything to that?
I think, along with what Allan said, the maturity of public cloud, so all the additional services, the added security, Google Apps being HIPAA compliant, it's driving, I don't want to say more important workloads to public clouds, but public cloud is an option. And we're even seeing from some of our customer research that security customers are trusting third parties with the security of their data as opposed to building it themselves in some cases. So I think different workloads will always go to different places depending on the regulations and compliances, but I think more and more is going to public cloud.
Okay. The next question we have is about HP's Helion. When do you think it can turn into a contender?
So this is Allan. In terms of Helion, so obviously they're, it's a recent announcement, still kind of building momentum and actual services to be provided. So I think, we're at least talking about initial traction next year. I think we're at least 2 to 3 years out in terms of the traction or the HP Helion actually being a contender in terms of showing up at least as a growth leader in terms of some of the market segments that we look at. Because obviously, even if you look at, Microsoft, which is, well ahead of where HP is in terms of announcing the overall cloud program and the strategy, it's taken a number of years to build to this level, and so we're almost looking at, a 5-year time frame for them to get beyond a marketing approach, really start to gain traction, and then, with last night's earnings release, looking at a $4 billion run rate in terms of their as-a-service business for cloud services. So it took quite a long time for that to happen. I don't think HP is going to, deviate from that, where it'll be a multi-year investment in terms of actually getting onto sizable revenue run rates for the cloud services space.
Okay. Jill, anything to add?
Sure. Again, going back to our customer research, HP along with IBM are definitely winning in the hybrid space. So I think HP is going to leverage its data center, its private cloud, its managed services. I think it's going to leverage the assets it has and then add public cloud onto that. I also think HP is a good contender to potentially partner with Google's platform to, again, keep control of that relationship, but offer their own branded cloud, so their branded private, hybrid, public cloud, but then also if a customer wants XYZ workload on potentially a more cost-effective Google, they can do that as well, but HP remains in control. So I think, like Allan said, similar to IBM, it will take a few years. We saw IBM and Verizon kind of launch a few different infrastructure as a service portfolios before seeing success, and I think HP did the same thing, but now with Helion it seems like this will be the portfolio that takes off.
Great. The next question we have is, with Microsoft recently announcing the distribution strategy of having Azure aggregated through this model, what role do you think the distribution channel will play in a company's success in having a commanding presence in the public cloud market?
Yes, so I think 2 things will determine the success of the cloud partner model, 2 kind of models for partner involvement. The first is the developer community, and certainly they're pushing very hard to expand the presence of Azure as the development and deployment backend for their developer partners. And then secondly, for there needs to be a network, as we looked at the shift in terms of customers wanting not just independent services, but true solutions in terms of pulling together multiple different cloud services, providing an integration and aggregation layer on top. There needs to be a channel network or a network of non-cloud providers to do that. And so the channel programs that are in place for traditional IT, make great sense to be the ones on the front lines delivering that aggregation and solutioning. And so I think Microsoft's move to make it a more flexible consumption model, both for customers as well as for the channel partners to participate in that, is it's an initial step. It allows them a little bit more flexible access, but ultimately it's on Microsoft to enable them to deliver the value around the Microsoft solutions that they're providing the white space. So I think it could be a big impact long term, but it certainly is a shift for a lot of the traditional Microsoft channel partners to evolve beyond just being a reseller channel to really be have a different role and a different value proposition. So I think the structural change is important, but the support to enable the partners to make that next transition, I think, is the more difficult part of the really demonstrating the way that a channel can be successful in terms of building a cloud ecosystem and being a delivery model for the solutions that are enabled by cloud services.
Okay. Next question we have is hybrid cloud. What are the standards and options for a hybrid cloud environment, Docker, etc.? Who could be the winners and losers?
So with the hybrid cloud market overall, in terms of the different standards, the different processes, really the one that we're looking at is the integration and the development layer in terms of the connection between services, the marketplace to build, design, and then ultimately consume that. I think that's one of the most emergent markets that we're seeing in terms of cloud overall, but it certainly is driven primarily by a hybrid environment in terms of being a broker, integrator, orchestrator. Those are all things that are part of the complexity of consuming a hybrid cloud, and that customers are going to be looking for solutions and willing to invest due to the pain points that we see a lot of customers having around building and transitioning to a hybrid cloud environment. That's not one where everyone is going to be able to build their own integrations and pave that path for themselves. So there will be a market and value in terms of being that front end to enable the transition to hybrid cloud.
Okay. The next question we have is, are customers paying attention to the infrastructure that is behind the public cloud offers?
So in terms of I think with the types of workloads and services, so obviously Jill mentions some of the features that are being added around Google Apps with HIPAA compliance, that type of, it's opening up additional workloads that are prompting increased scrutiny in terms of the infrastructure behind it, the different compliance areas. I think it's not necessarily for the certain set of workloads that drove the initial migration to a public cloud environment wasn't as important, but as it gets into being on the fringe of a fit for more workloads within the customers that we're talking with, engaging with, the workload is driving more scrutiny in terms of the underlying infrastructure. So I think we have seen a uptick in terms of the actually looking into the elements of the solution rather than simply consuming the service.
Okay. Next question we have, there's a couple questions on analytics, you guys. So the next question is, what are the best practices that you've seen customers use to maximize the results they get from analytics?
I think now that a lot of analytics are being added to applications, so companies like Google are adding analytics APIs. I think Salesforce launched an analytics tool. I believe Workday did as well. I think it's becoming increasingly important to have both in-app and out-of-app solutions, and customers are leveraging this in terms of better dashboarding, predictive analytics, understanding what their customers are doing A lot of times in the help desks, they're helping customers they're adding, it adds automation to different processes. I think where the trouble is going to be is that there's so much data out there and so many different solutions, it's going to be hard to figure out which data is relevant, which processes are best to do analytics on and all of that, because ultimately what it's going to do is run up your compute and storage awfully high. So figuring out best practices around using BI and analytics and which workloads to run it on, I think will be a challenge, and I think it points to an opportunity for professional services firms to help with unique use cases across different customers.
Okay, we had a follow-up, Jill, on the analytics. What do you expect to see as pitfalls customers will encounter in the next few years in regards to analytics?
I think that there's going to be so much data coming from these analytics solutions, it might not point to a clear direction, but it might add confusion and complexity that will need to be, again, sorted through. So if you're running analytics across a different number of workloads or running different analytics tools, they might not all point you to the same direction because different things will be important and different things will trigger answers across the tools and across the workloads. So I think the pitfall is going to be too much information.
Okay. We have a question on Salesforce. Salesforce.com and wearables. Do you really see a big market for wearables in enterprise versus consumer?
You know, I've been struggling with this for a while, and I do think there's going to be a big market for it. I think it's going to help a lot of the field workers, so technicians and people like that. But I also think that Salesforce is going to collect the data from consumers to sell or to create applications for insurance companies or for hospitals or to glean analytics from it to help drive applications from there. So do I think that Google Fit, for example, is going to be a huge market for Google? No. But I think the data it collects, similar with Salesforce, the data it collects and the capabilities it enables with applications will be huge.
Okay. We have an Amazon Web Services specific question, Jill. So it is, can you elaborate more on AWS's hybrid focus? Given their lack of on-prem offerings, how are they promoting their hybrid capabilities?
Sure. So over the past, in the past, Amazon has been very, very cloud-only focused. But now that they're getting more into the enterprise and maturing their offerings a little bit more, they are starting to talk about hybrid capabilities. And what they mean by that is it's an offering called Data Pipe. And it transfers data from the Amazon cloud directly to on-premise servers. So it connects the data centers to the Amazon cloud. And it's a secure solution. Amazon is building it out. I think they just launched the service most recently in APAC. So that's what they mean by promoting the hybrid. They understand that not all of your data center, not all of your workloads are going to go to an Amazon cloud. Not all of your workloads are going to go to cloud, but it's really important for Amazon to help customers get the cloud benefits as well as continue to get benefits from the billions of dollars they've invested in their current data center.
Okay. We have a couple more questions. I think we have more questions in queue than we can get to, so I'm going to ask one, maybe two more. The next question we have is, what do you see as the long-term enterprise compute mix to private data center versus private cloud versus public cloud?
Sure. So I think it's important to kind of keep in perspective as we look at the different segments of the cloud market here, in the context of a multi-trillion-dollar overall IT market, it's still not it's still not breaking into the double digits in terms of what the overall representation of cloud investment is if you put it into the context of the broad IT solutions space. And so, going forward, how we see the mix changing is private data center remaining the majority of the investment and spend, certainly going forward. You're going to see some of that transition over to a private client-owned environment. And so I think that'll be the reinvention of the traditional data center. You'll see more and more cloud capabilities built into the data centers that customers own and maintain themselves. Now, how we see the private and the public cloud services fitting into that overall environment really is continued migration over time of certain workloads, and that if you look at it from a dollar perspective, we do not expect it to be a majority of the spend in the near future, but it will erode over time some of the services, and particularly as cloud data centers become more built out around the globe in terms of within Europe, meeting all of the country compliance and regulations there. You're starting to see initial build-outs for a lot of the global providers today in Asia Pacific. So very kind of early days in terms of that global expansion of cloud services. So over time, that will drive the erosion of the traditional data center market in favor of shifting more of those resources outside customer data centers and subscribing to them through a third party.
And you also have to keep in mind the newer companies. So I think it's safe to say the majority, the vast majority of startup companies will choose cloud and most likely public cloud unless they're going into healthcare or more heavily regulated industries. But that also is going to drive public cloud revenue, not so much in the short term, but definitely as these companies get bigger and bigger. So think of the next Netflix or Airbnb. They're completely built on public cloud infrastructure. So as those companies get bigger and potentially take share from more traditional companies, that will play into the mix as well.
Great. So we have several more questions in queue. We had a question on the Internet of Things, telcos, as well as IBM. So unfortunately, we're not going to be able to get to those today. So we will follow up with those folks that have asked questions offline. So I'd like to start wrapping up the webinar. I want to thank everybody for your questions. They were great. I want to thank the analysts for your time today. I want to bring attention to the fact that we have 2 additional cloud webinars that are focused on the end user research that we're doing on July 30th and 31st. We have the Maturing Cloud Professional Service Markets and Vendor Opportunity webcast done by our services team, as well as Cutting Through the Fog, what is private cloud and what role does it play in the broader IT market. And those are both coming out of our customer research stream. So we do encourage you to join us on those webinars, as well as visiting our website. As I mentioned, Jill and Allan have been doing some thought leadership free downloads that you can look at and they can say what's happening with the market and the ecosystem. So I do encourage you to go and download those pieces of research. As I mentioned, we are going to share the social media links with you at the end of the presentation. So I do encourage you to follow Allan, Jillian, as well as TBR. And we do have a TBR Cloud handle. It's at TBR Cloud. So I do encourage you to follow that to keep up to breath on what we're doing in our cloud research stream. As you're leaving the webinar, there are a couple quick questions. We are taking this feedback into consideration. How valuable was the presentation? How good were the presenters? And if there's any other open-ended feedback you'd like to send over so we can improve our presentations quarter to quarter. We do this public cloud webinar each quarter. And we want to make sure that you're getting value for the hour that you are spending with us. So any feedback will be looked at and used to improve our presentations. I'm going to keep the webinar open for another couple of minutes because of any last-minute questions or requests to talk to the analysts. And if we don't hear from you now, we look forward to seeing you on our future webinars this quarter, as well as webinars next quarter. So thanks, everyone, and good luck this quarter, and we'll talk to you all soon.